I'm gonna start recording here. All right, what's going on, everybody? Welcome back to another webinar. For those of you guys who are been or who have been in the day trading institution, for those of you guys who are new to the day trading institution, welcome to the first webinar you guys are going to be attending. So basically, how I said before, how the webinars work is typically I'll break down the two main pairs that I trade, which is going to be gold and GJ, and then we get into the Q&A section of the webinar, where basically you guys can ask any questions regarding technical analysis, trading psychology, or just a question, in general, if you're just curious about something. So with that being said, new week, as you guys know, we start off on the weekly time frame and then work our way down. And you guys always want to practice a top-down analysis approach when coming to the markets every single day, because we need to take a look at our bigger picture time frames first to determine the direction we're going to be looking to possibly take a position. Because of course, if price on the higher time frames, which are the more reliable time frames, is bullish, then we're only going to be looking to take buys. Vice versa, if price on the higher time frames, which are our more reliable time frames, is bearish, then we should only be looking to take sells on the short time frame. So with GJ here on the weekly time frame, if as you guys can clearly see, price action has been trading pretty bearish over the last few weeks. Price has just been getting lower and lower. Ultimately, we have a lot of consolidation. That's why you see big wicks to the downside, big wicks to the upside. More importantly, what I'm kind of paying attention to is these last 3 weeks here. These last 3 weeks, price has kind of been consolidating within this specific zone. And so far, there's no real clean direction. There's no real clean, okay, we're going to go up. There's no real clean, okay, we're going to go down. As of right now, price is still in a consolidation range. So with price still being in a consolidation range, we know that in a consolidation range, the goal within this consolidation range is to buy at the lows and then sell at the highs, which ultimately is what I've been doing over these last few weeks, because there's no real direction. There's no real break of support that's telling us, okay, price is going to go down to 159. There's no real break of 164 resistance that's telling us, okay, price is going to come up into 166 or 168. So we're going to continue to trade, or at least I'm going to continue to trade this consolidation range, because it is still a valid range to trade. Now, taking it a look with more detail, what we could see a little bit more accurately are the highs and the lows of the range. So essentially, the lows of the range are going to be roughly in between this 162 zone, and the very lowest point that we have here is going to be 160, which ultimately, if price breaks under 162, it's going to go all the way down into 160, and then we'd have to see what happens there. But taking a look at the daily time frame, although price is broken under 162, pierced under 162 and gone all the way to 160, notice how every single candlestick here on the daily time frame has closed back above 162. That is a key sign for price to continue to go up. These are key signs of rejections. Although you could have caught a short from this point to this point, price still rejected this 162 area, making this area of support valid and making this area of support still maintained. Now, with current price action here on the daily time frame, what we could see price is doing is price is slowly losing steam or losing momentum to the downside. Notice all these candlesticks getting smaller and smaller. That is a sign of loss of bearish volume, which when we see price losing bearish volume towards an area of support, we can almost anticipate bullish volume to come in, because again, we buy and trade at these, or we buy and sell at these support and resistance levels, at these supply and demand levels, because there's going to be selling and buying pressure in these zones. There's going to be liquidity in these areas, and there's going to be order in these areas. And of course, when there's a lot of orders in the specific zone of supply and demand, what causes the breakout is the speed of which those zones actually come into the market, which is why we see big moves to the upside or big moves to the downside off of these supply and demand levels. You could just kind of pretty much mess around with a horizontal line, put them where you see the big reactions, right? And then you'll see where your major levels are. Now, with GJ rejecting 162 literally day after day after day, we could definitely see price go up. Now you have to ask yourselves the next question. You've already determined that, hey, price is most likely going to go up from this level. Where could we possibly see price go up to? This is where you're starting to build a case on your trade. This is where you're starting to really build a trading plan. So with price rejecting 162 from a long-term picture, because again, this is the daily time frame, we can definitely see price come all the way back up into this 164 range, or the highs of the resistance, pretty much the resistance zone that we have here, this entire consolidation range. So we could definitely see that actually happening, price coming all the way up to here. Now, how would we take this on a lower time frame perspective? right? Realistically, what we'd have to wait for are our entry signals, which would be a bullish engulfing, which would be a bullish variation. Something along those lines is what we would have to see in order to actually take this position. We just don't want to kind of take the position, especially not on a Sunday. We would want to wait until volume actually comes into the market, which is roughly pre-London session. Now, things change a little bit when we actually have price break under 162. If price were to actually break under this 162 area, then most likely it's going to come down into the next zone, because overall, this is an area where there is a lot of big wicks towards the downside. So the start of the zone, or that I'm kind of paying attention to, because you have to remember supporting resistance, supply and demand, it's all a specific zone. It's not necessarily just one price range, right? So the area that I'm kind of looking for this support level to be rejected is this entire area here, which is going to be roughly 161 to about 161, or 161,800 to about 161,300, which is a pretty big range. But ultimately, if we look at the history of price action in this entire zone here, we have big rejections and big wicks towards the downside, which if you bump it up to a daily time frame, you can kind of see those wicks come into play here. So this is a zone that you need to pay a lot of attention to, because it could definitely just completely reject and go in the opposite direction. And if we're going to be looking for sells, honestly, I would want to be a little bit more conservative, meaning that I'd want to wait for a break and retest pattern at this area of support. So essentially what I'd like to see for me to want to take a short is a nice clean break to the downside, a pullback into our previous area of support, and then a nice rejection where we could look for price to go down into 160. I wouldn't really start looking for sells again unless price starts to break under like this 162 zone, or if I want to be a little bit more accurate, 161,843. Now I am looking to buy at this area again, just mainly because, again, this is where we've seen price reject over the last few weeks. Literally since June, price has been rejecting this 161,800 support. Literally day after day, week after week, prices failed to completely close under, reject, and make new lows. And we've seen prices come all the way back up to 164. So I'm going to be looking for a bullish move off of 161,800 tonight. Realistically, how I would like to play this is I would like to see this 4-hour candlestick close. Although the 4-hour candlestick over the last, or not even the 4-hour candlesticks, but over the last few days, saying from, let's call this the 10th of August, price is already rejected here, it's rejected here, and it's already rejected here again. So we already have 3 rejections at a major area of support, which it is looking like we could definitely see a bullish move from this area. So realistically, at this point, what I would like to just kind of see is a stronger buy confirmation, some form of a bullish engulfing, or at least price start to break above these 4-hour highs right here. Once we can see that, then I'll start to look to stack into some buy positions. I wasn't on buy positions pretty much along this area over here. Price did go up into, or price did go in my favor. My targets were up here. I moved my stops to break even, and I got taken out at a break even. I think I made like $600 on that trade, which is just break even for me. But obviously breaking even is way better than losing money. Let me let everybody in. I didn't know how many people were waiting. Right. So that is going to be pretty much what I'm looking for on GJ. I mean, you could trade it a little bit more aggressive if you'd like, maybe wait for a double bottom and then look to actually buy it there. Where I would stop looking for buys is if price breaks under these lows. If price breaks under these lows, I would stop looking for buys. Once price breaks under those lows, then it's pretty much you could wait for a break and retest and look to go short. The only concern I would have is maybe something like this also happen again. But other than that, I mean, I think I made it pretty clear. I'm looking for buys, what you should wait for when looking for buys. I mean, if you want to be a little bit more conservative as well in terms of like looking for the buys here on GJ, you could wait for a break, this area of resistance, the retest, and then look for price to continue to go up into these highs from here, which, I mean, that setup alone could have a possibility of 60 to 71 pips, right? You don't have to, even though on the daily time frame, you could be targeting 164, right? You could trade from intraday level to intraday level. So essentially what I mean by that is, let's say you actually take that break and retest from this point on, you can have multiple targets throughout the entire move. So right here alone, there's 2 targets. So you can even put another target right here, this intraday support level, and then you could target, you could be TP1, TP2, and then TP3, and then continuously throw your stops. I mean, there's so many endless possibilities of trading. But ultimately, what I'm going to be looking for again is just kind of like this break and retest pattern to kind of play out here, or at least wait for price to break above the highs to start really looking to buy. because price can just consolidate until the London session, which again, you should only really be trading during a session where there's going to be more volume into the market, especially on a Sunday. I wouldn't be looking to take positions all too long unless you're already in on some positions, because I know some people, such as myself, like to trade as close to the major levels as possible. But that's pretty much what I'm going to be waiting for on GJ. So when it comes to gold, over the last few days has been fairly interesting to watch to see how this pair has actually played out. So I have my major levels marked off here on gold in 1786, which if you look to your right here, 1786, 840 is a major level of support that I was looking at, where we did have multiple rejections over the last few months. And we did see price actually reject a few weeks ago, but then actually price continued to trade higher and make new highs and break above its original highs, which not that it was expected, because this overall trend is pretty bearish still. If we look at market structure on the weekly, over the last few weeks, we have high, we have a higher low, we have a high here, we have a lower low, lower high, lower low. So I was expecting this to be a possible lower high, but price continued to trade higher, which gave me no reason to actually look to take a sell position. Once price actually broke above 1786, which is right here, right? We had a break here, we had a retest, and then price moved away here. This is time for you to start looking to take a buy position. Now, in terms of looking for taking a buy position on gold here, realistically, what I would like to see is for price to pull back into this daily level here, form an area of support. Once we see that support range, we can then look to take buys into the next support level, which is going to be these highs up here at, call it roughly 1807, maybe, which is roughly from this point to this point, about 123 pips away. So that's really all I would like to see, is a nice pullback into the support level, right? Wait for price to reject that area where we can then look to take price into the highs up here. And again, we want to take trades only at supply and demand levels, support and resistance levels, because these support and resistance levels give us an area to protect our stop loss and create the highest probability trades possible for us to be able to look to take these positions while decreasing our risk and maximizing our reward ratios as much as possible. So that is going to conclude the breakdown section of the webinar. Does anybody have any questions or anything that they would like to ask me?
I sure do.
That's good.
Hi, Raul. How you doing?
I'm good. Thank you, bro. How are you?
Good, bro. Thank you for asking. I'm in Jalisco, Mexico. So I'm looking at GJ right there, bro. By the DTI, you mentioned on the 4-hour time frame that we had to look for market structure. If you zoom out a little bit more, you could see that we're going to that little range right there. That's a new lower high coming from a downtrend where you marked up 164 area.
Here?
So that whole area is a new lower high, correct?
I mean, it really depends on how you look at this market structure, because some people, we all have different eyes. People are going to look at this market structure very differently. One individual may say this is a high, this is a low, this is a possible lower high. Another individual may say this is a high, this is a low, lower high, low, lower high, lower low. Then we have a higher high, higher low, highs, et cetera, et cetera. There's so many different ways to mark off this market structure.
That's perfect, brother.
Yeah.
Thank you for explaining that. It makes sense now, because I would look at the market in the bigger perspective as like we're obviously coming in a downtrend, and that looks like a new lower high, but at the same time, the way you explained it right now, it kind of makes sense, because now most recently we're building a new market structure, right? Because we're obviously on a higher time frame.
Well, here's the thing, right? Markets are trending. Yes. I mean, you can consider this to be one trend. You can consider this to be another trend. You can consider this to be a trend. This could be a trend. This could be a trend, right? Yes. Ultimately, you could say markets are trending. If you're trading an hour time frame, a 30-minute time frame, even this 4-hour time frame, right? These are all minor trends. But what do you see in the bigger picture, right? If we look at price action here, what we see ultimately is price is moving sideways, right? Because if we look at this market condition here versus this market condition over here, where would you say the real trends are, right? Two completely different situations. So although you have a trend within this entire consolidation range, right, it's still a consolidation range, and you need to keep that consolidation range in mind. You can't lose focus that, hey, price is still consolidating unless we break out of the range, you know?
Yeah, I hear you.
Yeah.
No, that's pretty cool, brother. I always kind of get stuck on a swing trader type of view, and I try to I try to trade along with the trend, but obviously we're on the 4 hour market, and then the lower time frames have different market structures. So
I mean, the one thing you got to keep in mind, I mean, trends are going to come and go. There's different cycles in the markets. You're going to have different market waves. More importantly, you just have to identify what type of market condition you're actually in so you can make the best decision possible. You know,
I've noticed that when the signals get sent, we only have like stop loss like 10 pips. What point of view are those signals getting looked at? 5 minute,
they're all based
15
off
minute?
they're all based off very low time frame. They're all based off of breakout trades. So the signals is called based off like a 5 minute time frame.
I see, because I be having a lot of trouble. I paid for the signals, but I really do have trouble with GJ. I do not like GJ, brother, right now. I don't like it. When it comes down to gold signals and all that, I'll take them, but GJ, I always get like stuck on them.
Well, I mean, yeah, I mean, if you're taking signals and you're just looking to take trades based off of other people's opinions, then realistically, like the pair that the signal's being called doesn't matter. You just mainly have to manage your risk and focus on managing your risk and managing your emotions throughout the signals, But if you're just trading ultimately for yourself, which is the majority of what the people here in the day trading institution are doing, then ultimately you have to identify what assets that you would like to trade, what assets that you could read price on the best, because a trader could be garbage at trading GJ, right? They move on to crypto or they move on to commodities and they're 10 times better just because they read price action better and they flow with that specific asset a lot better versus maybe a currency, Like there's pairs that trend more, there's pairs that consolidate more. Ultimately, you have to find what suits you and what works best for you.
Yeah, definitely. Thank you, brother, for explaining that to me on this GJ pair.
Yeah.
Raul.
Let's go, bro.
Quick question. So I stayed in on a trade since Friday and I got in on the GJ, and it obviously went into that
Structure, breaks, and all that stuff.
What?
About what you're saying, Justin?
Oh, sorry. 162,473 is where I got in, and it's just been kind of ranging, that whole time. And
on a buy?
No, on a sell.
Okay, so 162.
473.
Right
yeah,
here.
like right around there. Yeah. And as you can see on that that bullish candle, it touched. And unfortunately, my stop is only at 7 pips. So I mean, it's it's very small, but as you can see, it hasn't really that right where that that black the black candle right there. That's where I got in, kind of like the middle there. And which was exactly at London time on the 12th. Do you think, I mean, based on what you're saying, because I feel like I'll be able to just get stopped out real quickly. Do you think I should just close my trade now, or should I just see how it goes?
I mean, ultimately that decision's up to you. I don't know why you take this trade, the same reason why you may not know why I took my specific trade. Ultimately, like I said before, that decision's up to you. The one thing I could tell you and keep in mind is that 161,800 is a major area of support. So price has a possibility of bouncing from this area. And if you want to hold your position, then that's a risk that you're willing to take. The best advice that I could give you in a situation like this is if your trade is up here and you want to continue to hold the position for a possibility of making obviously a bigger profit, then all you really have to do is trail your stop loss. Where would you trail your stop loss? Well, if price breaks above these highs here, most likely sells are invalid. And you shouldn't be looking to sell at that point anytime anymore. So you could trail your stop loss to 162, 184, and then see what happens from there. But then obviously, where price is currently at, that's like 23 pips you'd be giving back to the market. So pros and cons,
Right. Yeah, I know it's so tight. because it's been that whole consolidation range, you know.
Yeah.
All right. Thank you.
No problem.
Hey, Roll. Yeah, quick question, bro.
What's up, bro?
Yeah, when it comes to obviously with GJ at the minute it's consolidating, right? And
Yeah.
you know, like you kind of like to take more like aggressive entries at like your, you know, your major supply and demand zones, yeah?
Mhm.
So like if you see it sounds consolidating, and when it comes to like your aggressive entries, is there normally like a certain like kind of time frame you look at to kind of get your entries off like a like a bullish or bearish engulfing or whatever?
So the best example that I can give you in terms of like how I like to take some of my entries, really it's all based off rejections because I mean, how can I put this into example? Like depending on the account that I'm trading will determine how aggressive I'm going to be trading that account. Also, I'm a big like, I was about to, that would have been the wrong terminology. What would be the word here?
Cause like there's been times, right, where like just get an example, like price breaks and you be like, okay, I'll go for more of an aggressive entry, but use like lower risk, but then you wait for like the retest and then you go for another entry. But like sometimes obviously it's case to case, but like sometimes price just kind of, you know, goes all the way down, or like, you know, it doesn't really have as much of the retest, while if that kind of makes sense.
Kind of.
Yeah,
I
if you
mean,
know what I'm trying to say.
like obviously, you know, trading is all a game of probabilities,
Yeah,
right?
exactly.
Anything in life, there's a probability, right? If you're riding a motorcycle down the street, you have a probability of getting hit by another car, you have a probability of the bike slipping from under you. Like, you know, there's pros and cons to everything. In terms of like trading, like let's say you have I'm going to give you a random example. Let's say you win 70% of the time, you still have that 30% that you're losing. You know what I mean? So the best thing to do is one, always manage your risk. More importantly than just managing your risk is making sure you're comfortable with the risk that you're taking on your account, right? Because an individual can have 100 grand in their account and absolutely do phenomenal risking $10,000 a trade because they're comfortable with that risk. And maybe that 100 grand doesn't mean as much to the individual, but maybe another individual may have 10 grand in their trading account and they're not even comfortable taking $100 risk per trade. You know, every individual is going to be different. Ultimately, when it comes down to me and my trading decisions, really it depends on the account that will determine the type of entry that I'm going to take. Right. So I like to look for my more major supply and demand areas and take trades based off of those major supply and demand areas. I also take the trend into consideration, of course. So the best example that I could give you here is 164, right, is a major area of resistance that price had rejected for quite some time. With that major area of resistance, there is also this intraday level that we have pretty much marked off here, right? So when it came to me, I actually ended up taking a position on GJ here, where my entry was right when this bullish candlestick closed. Right when this candlestick closed, basically what it showed me is that price came up into this area of resistance. There was selling pressure. There was obviously liquidity here where price actually rejected and price had a probability of going down. Does that mean price is going to go down? No, but price is a higher probability of going up than going, or price is a higher probability of going down than going up because of just this one simple rejection. So that gave me enough confidence for me to take my aggressive entry. Now, I like to take aggressive entries because I'll also give you this example here, right? Let's say I'm targeting this area of support down here, right? And I take my aggressive entry here, right? Comfortably, I had like a 25 pip stop loss, which is, I mean, it's a normal size stop loss for this specific pair, right? 25 pip stop loss, and my possible reward was around 88 pips. So that's 3.5 times my risk. If I would have waited for this engulfing candlestick, which is a sell signal with the same stop loss, my 3.5 RR would have turned into a 1.3 RR, and it wouldn't have made sense for me to take the position.
Yeah,
right?
exactly. Yeah.
So with that being said, the safer trade would have been to wait for the engulfing. Yes, because again, you're getting more influence onto the position that you're actually taking. But at the same time, everything has its pros and cons. What are the cons of trading more aggressively like this? You may get stopped out more frequently, but the pro is that the risk to reward compensates for you losing maybe one or two extra positions. Versus what are the cons of this area here? You kill risk to reward. And you may not even take half of the trades that you're actually able to take because the risk to reward simply just doesn't make sense. You know, So
Mhm.
ultimately, you have to find what suits your personality and what works best for you. This is a trading methodology that's very comfortable for me because I can give you another random example. Let's just say price comes down. Let's say this hour candlestick comes down and price gives me this big wick to the downside, right? I'm going to take a position. I'm going to start adding onto buy positions right then and there because they showed me again that there is buying pressure throughout this entire area here. So then
Yeah.
what I'll be able to do is enter a long position here with my stop loss under that wick, and then I'll be able to target it up here versus then me waiting for an engulfing candlestick, which could look maybe something like this, then having to take a trade that looks like this, you know,
Mhm.
where I'd only get 1.3 times my risk versus getting 3.4 times my risk. Me personally, I don't care if I lose more than I win. What's more important to me is that if I lose, I'm only losing $10,000. But when I do win, I'm win 30, 40, 50, $60,000. This is why I'm having these crazy $60,000 days, $40,000 days. I had like 5 back-to-back, like $30,000 days, like a few weeks ago, you know? But ultimately,
Your wins are always more than your losses because of your risk management, etc.
I mean, of course, ultimately
Yeah.
more, it's more about risk to reward. You know what I
Yeah.
mean? I tend to focus my trading on risk to reward, versus than just, you know, looking for like a 1-to-1, 1-to-1.5. Although, you know, if that works for you, then that just simply works for you. There's no one right way to trade. What's more important is that your trading account comes out at a net positive gain.
Yeah. Cool. Yeah. Appreciate that, Raul. Thank you.
Yeah, no problem.
Hey, I have a question. So how do you trade with news?
I mean, it ultimately, like, it depends, right? So if I'm already in a position that's in profit, I'll just simply move my stops a little bit more past and break even just to try and account for slippage. If I'm not in a trade, I'll just wait for the news event to happen, and then see what the market looks like after. But ultimately, like, you know, it's always best to not trade news just because there's just so much extra added volatility. Spreads are pumped up by your brokers, you know. If you're trading on a really shitty broker and they manipulate their B book liquidity, then you're gonna get stopped out, you know. There's a lot of like cons to trading news. But then there's also times where I trade news and I make $50,000 in a second, you know, pros and cons.
Let me ask you a quick question. How do you do that?
I
Is it like,
don't like how I actually trade news is I'm already in the position before the news event even happened and my position's already in profit. Typically, it's a trade that I've been holding. And then it so happens to be that the next day there's a news event and the trade didn't play out in my favor. So like example here, like this is with CPI. I was already in on GJ shorts at this point. I was already in on GJ shorts at this point in time here with CPI with my stops up here. Notice price going to my favor, consolidate. I knew we had CPI news, but I'm going to continue to hold my position. And CPI ended up pushing price way past what I initially expected. But then here's the con with trading news. Look what happened. Price came all the way down here and then pulled all the way back up. And that's actually where I ended up closing because I woke up and saw this huge wick. And then that's where I ended up closing out. But then price continued to go in my favor, but it didn't even matter because I was already out of the position, you know. But then I ran the risk of, hey, you know, this trade being in profit all the way over here, price coming all the way back up, you know, possibly stopping me out, taking me out for break even or even at a loss, whatever the case might be is. And then continuing to go in the opposite direction, I was just flat out wrong, right? So, I mean, ultimately, it's a decision that you have to make. What I could recommend you based off of personal experience over the last few years is trading news has really never been like a real way to consistently make money.
Hey, Raul, quick question.
Yeah.
Hey, how did you end up deciding on the pairs that you're gonna end up trading? Like, how did you end up
I don't
basically
really,
deciding?
I wouldn't really say like I decided, right? I would say it was trial and error throughout the last few years. I mean, when I first started trading, I started trading USD JPY. I did trade GJ as well, but then ultimately, like, you know, I was looking at 5 or 6 pairs, and then I started realizing that maybe, you know, working on trading on 5 or 6 pairs ultimately isn't going to get me closer to my goals because I'm just more distracted with all these other pairs. Because if you're trading 5 or 6 pairs and you see like 3 setups on different pairs, you're going to be like, damn, should I take this one, this one, this one, or should I take all of them? Or, you know, what should I do? And, you know, ultimately, like, you should just put your focus on 1 or 2 pairs, one only if, you know, you can at best, so you could really understand that pair and how that pair moves. It's kind of like spending time with a person, you know what I mean? If you spend time with one person for a year, you're going to get to know them a lot better and a lot quicker than spending time with 5 people and getting to know all of them, all 5 of them at the same exact time, you know?
Yeah. Okay, thank you, man.
Yeah. The best advice that I would give you is really just read price action, look at market structure, on all different time frames on that specific pair. And if you feel like you could read that pair fairly well, then I would just stick with that pair, try trading. And if, you know, you're only going to get better with time. But if you could just like open a chart and kind of almost easily identify structure, like on the daily time frame, then maybe that's, you know, the pair that you want to put more emphasis on.
Okay, thank
Versus,
you.
yeah, versus opening up a pair and you're like, I don't know what the fuck is going on. You know, why even trade it?
Yeah, because before I used to look at all the pairs. Like I literally had like 30 pairs. And I'm like, what the fuck am I looking at?
Literally, bro. You really, realistically, like you only want to focus on like 1 or 2 pairs. You only need 1 pair to make you money, you know?
Yeah.
One pair, one session.
Literally 1 pair, 1 session, you're good. Look at Jeff. You know, 1 pair, 1 session.
That's all you need.
Bro,
Yeah, I guess that was a struggle before. I wanted to look at everything, and like you said, I wanted to take maybe like 5-10 trades, and you know, I saw that I was losing a lot more, but it
Yeah.
just it makes sense.
Yeah,
All right, thanks, man.
yeah, no problem.
Yo, bro, can you go over your indicators?
Yeah, my indicators are what you see on my screen currently. Literally, these are my indicators. Just price and horizontal lines. That's all you really need.
Market structure.
That's it.
Raul,
All right, thank you.
can you go
Yeah.
over ETH,
I'm sorry?
Ethereum?
I mean, I can, but I mean, crypto is just a completely different like asset. So what we normally like trade. I mean, what would your goal for me be? What would your goal for me like looking at Ethereum be? Are you trying to look for an intraday price movement? Are you trying to like get like a long-term perspective?
Oh no, so I was looking at like intraday, so I was a little confused because I see like in the daily it's going up, but then when I go down to the 4-hour, it looked like it's gonna come back down real quick. So should I wait?
Well,
So does it pull back or
well,
take
taking
it
a
to the
look at
max?
like this long-term perspective, because you always want to start off the weekly and work your way down, right? Ethereum is making lower lows and lower highs, right? So overall, cryptos, obviously, you know, we all kind of expect them to go up long-term. Me personally, I don't believe cryptos is going to go like up and really pump up, you know, just yet. I do think this is like kind of like basic market manipulation where prices pumping up now, so people could start buying cryptos, and then it's going to dump yet again to even lower price, so then the big boys can actually get back in. But looking at the daily time frame, I mean the weekly time frame, obviously price in a bearish condition. Looking at a more shorter term time frame, we have to pay attention to this market structure here. We have a high, higher low, higher high, higher low, higher high. So with this market structure forming higher highs and higher lows, we can continue to look to buy with this higher high, higher low market structure until we have any form of change within this structure. Now we have a major area of support marked off here. And then we can also mark off a major area of resistance, which could be right here. So now what we've done is we've built a range where we could possibly look to take trades from. These are going to be our major areas here based off of this daily time frame. So in the short term, I would like to say as of right now, price, yes, is rejecting this area of resistance, and we can expect a nice pullback into this area of support. Ultimately, though, if you want to take the risk and counter trend on this, you can. I personally wouldn't be like super comfortable taking counter trend positions. But again, it just comes down to supply and demand, support and resistance. Identify your nearest levels of supply and demand, support and resistance, and look to take trades from there. And then we can look at this area as being a 4-hour area of support and resistance, where we have big reactions from this area. We actually do see price currently trading at this level and currently rejecting it. So it's kind of like now we have different possibilities of what could happen. We can see price reject and come back up into the $2,000 range. Or if price breaks, then we know price is most likely going to continue to go down. How can you set yourself up for a trade setup if price does either or? Well, in a situation like this, realistically, I would like to wait for a double bottom pattern, which looks like it's kind of playing out right now here on the 30-minute time frame. So you can look to buy it back up into the $2,000 range. If price actually breaks under this support level, the best thing for you to do is wait for that break and retest pattern for you to actually look to take a sell back down. Hope that helps, bro.
Okay, yeah, that definitely answered my question.
Alright.
I appreciate it.
Yeah, no problem.
Bro, you hear me?
Yeah, what's good, bro?
I just have a general question about pullbacks. So just like, let's say if we're in a bearish downtrend and that first leg pullback, it
Mhm.
breaks above a previous level of support. And since we're in a bearish downtrend, we're looking to sell, but how would the break of that previous level of support make you think of the possibility of it breaking and retesting and going to the upside?
So you're telling me maybe something like this, where you have support here, you have support here, and price is now broken above it.
Yeah, and then how would
Yeah.
that like make you think about a move to the upside?
So essentially, like there's many different possibilities that can happen here. But realistically, if I were to see a situation like this, and I'm anticipating price to come up, like let's say this is a major support level on the daily, and then this is a fat daily engulfing candlestick. Really what I'd wait for is wait for a pullback into this support level. If this area of support continues to hold the support and price doesn't break back under, then you just need to wait for your buy signal to look to buy it up into the next area of support.
So if it's not trading at that like a major demand level and it's just in the middle of something, you wouldn't like put any much mind to it.
I would know it'd be a lot riskier of a trade than trading at your major level.
There would you still be taking, like, if it wasn't at that demand zone and your bias is bearish, would you still be taking that your aggressive entries, or are you trying to wait?
No,
to see?
definitely. I would try and wait because we only want to take our trades that are major levels because they you only want to take trades that are major levels because they create the highest probability opportunities. Once you
Alright.
can start filtering out like the garbage trades from your trading, you'll automatically see your profitability increase.
All right, thank you. That helps a lot.
Yeah.
Hey, Raul.
What's up, bro?
Can you take a look at US 30 for me, please?
Okay. Ugh. So, I mean, US 30 obviously continue to go up. The CPI news did come out lower than expected, which shows us signs that inflation is actually coming down a little bit. So, you know, the CPI news did come out positive. It came out, I believe, at 8.5% compared to the 9.1 it was expected to come out, which we did see a big pump in the stock market because of that, which is obviously expected. Taking a look at it from a technical standpoint, what we have is US 30 pull back into a major daily support zone. So realistically, at this point in time, I would just kind of like to wait. It's way too early to tell. Realistically, like you could look for a double bottom and go short at this support zone. Especially that I don't really think the stock market's going to make a full recovery just yet. But looking at it from a full technical standpoint, you know, it's not a major area of support. So right now, or previous support, which it could hold as resistance. So realistically, you know, you could wait for a double top here on this hour time frame. Hopefully, you know, that could play out by the New York session, which is really the only time you'd want to trade US 30 with stock market hours, because that's when you're going to see volume come in. Volume is going to cause opportunities, which, you know, when you have volume really equals money at the end of the day, right? But if price breaks above this area, then you just wait for the break and the retest of that area to continue to look to buy.
All right, appreciate it.
Yeah.
Hey, Raul, what's your opinion on trading on simulators?
Like backtesting simulators,
Yeah.
go for it, bro. I mean, there's nothing negative about it. I mean, you're only gonna get better with practice. You know, like I said, like technical analysis is a skill that you can get really good at over a certain period of time. Just like somebody who practices playing football, soccer, baseball, basketball every single day, they're gonna get good over time. Technical analysis essentially is very similar, right? Again, what makes trading hard is money management, psychology. You know, there's different aspects that make trading a lot more difficult, but technical analysis is a skill. So if you practice on your skill set every single day, you're only going to get better. You know, you dedicate 3 to 4 hours every single day back testing on a simulator, you're going to get good.
Appreciate it.
So does anybody have any last questions before I end the webinar?
Well,
Let's go,
one
bro.
last question.
Yeah.
So I trade futures, and I
Okay.
was just wondering if you think I could try trading like currency futures, or you think I should look into starting to like trade Forex, like get into the demo accounts and see if I can make a move over, or should I just stick with my futures?
I mean, how has futures been going for you?
I only trade the MES S&P 500, so
Okay.
I've gotten to know it like a lot, I guess I would say.
And
I'm
what times
comfortable
do
with
you
it.
trade it?
So I started and I have been scalping, but I've started to find some, like I don't think it fits me.
Okay.
So that's why I've always followed you, and I've tried to apply your like philosophy to the smaller time frames, and I'm not sure if it like works as well. So I'm trying to move over to like more of intraday day trading or even swing trading. That's why I joined the institution. Yeah.
Yeah, scalping for me has never really worked out all too well, because for me, like, if I'm gonna put $10,000 at risk, it's because I want to make 20, 25, $30,000. To me, scalping, I see a lot of scalpers, they'll risk 20,000 and they only make 10, 15. I'm like, that's a negative risk to reward ratio. I would never take a position based off of a negative risk to reward ratio. But hey, if it works for them, it works for them. But that philosophy has never sat well with me. Personally, if you feel like, it just that specific asset isn't working well for you, then I don't see there being any problem moving on to another one, or maybe even moving to an intraday time frame. More importantly though, if you do transfer over to trading a currency or trading commodities, I would just try and focus on that. But make sure you identify what pairs you could read price action on the best. Like, let's say you open up a gold chart and you're like, wow, this is like, I could read this cake. It's almost like reading like the back of my hand, then I would stick to that pair versus if you open up like a silver chart or Euro USD and you're like, I don't know what the fuck this pair is trying to tell me, just stay away from it.
I heard that.
Yeah.
Thank you.
Yeah, no problem. Ultimately though, more importantly, everything takes time. In this industry, everything takes time. Like, you want to look at it as if you're getting a degree. Right. When I first started trading, I always had like a 5-year goal in mind. If I stick to this and do this every single day and put all of my time, energy, and effort, where can I be in 5 years? Right. And then, just go back on to like, even like my Instagram or like my YouTube, and then compare like then to now, and you'll see the growth,
Hey, Ro, quick question before we end the webinar.
Yeah.
What are some things that can help you improve your psychology in trading?
I mean, like, there's so many different aspects for you to improve your psychology in trading. I feel like one of the major areas people may struggle with is over leveraging. I may feel, and that's what makes people constantly blow accounts. First and foremost, like, you have to have your foundation set with your technical analysis and understand why you're taking these trades, right? And then secondly, realistically, you want to trade with a certain amount of capital that may not mean so much to you, that if you lose it, you're kind of like, whatever, because what you're doing at that point in time is you're removing yourself from being connected to that capital as much as you possibly can. Therefore, you'll lower your emotional reactions to certain situations when it does come down to trading, right? If you're an individual where you have $1,000 in a trading account and you're risking $10 or $10 a trade, and that doesn't mean much to you, you're going to be able to make decisions a lot more logically versus a lot more emotionally. Does that kind of make sense?
Yeah,
So,
yeah, it does.
So essentially, that's what you want to do. You want to identify how much capital you can allocate to a trading account that doesn't really mean too much to you. And then you want to identify how much capital you can risk per trade that doesn't mean as much to you either. Right? Because I can give an individual 100 grand, right? And they could risk $10,000 per trade, like I said before, and they're whatever about it, because they're used to dealing with millions. Versus I give an individual 100 grand and they can't even risk $1,000 on it because they're just, emotions are all over the place. You're constantly looking at your P&L. Your heart rate is literally pumping through the roof. Your heart's about to pump out of your chest. And at that point, you're gambling. You know, even though you're only risking 1%, you're still not able to even maintain a position at that 1% risk because the amount of money you're just not used to. So you need to find what you're good at and what type of capital you can allocate to your trading account at first, to then, you know, focus on other aspects of your trading psychology.
Yeah, because well, like I had said yesterday on the Discord, I've blown like $12,000 on courses, on signals, and I've bought like on the platforms, I bought some challenges. But it is true, once, like, even if you're risking a 1%, like when you see it going like into red, like your heart just starts like pumping, and then you're like, fuck, and then like your mind just goes everywhere.
Yeah, because like it didn't take me a year to get to where I'm at today, to where I'm able to see $10,000 in drawdown. I'm like, all right, cool. You know, I'm gonna go eat. I'm hungry. Versus, you know, if I were to see $10,000 of drawdown 3-4 years ago, I'd probably be contemplating filing for bankruptcy, you know? So ultimately, it's really all about the level up. You know, you have to take it slow. You have to start off with $100 days, 200, so on and so forth. You know, don't try and rush the process because they're just going to make it more difficult for yourself. And then when it comes down to like funded accounts, first of all, you need to prove to yourself that you can make money, you can make a return on your investment month after month. If you can consistently make a return on your trading account for at least 2 or 3 months, then that's when you can go onto a funded account. And you don't want the funded account to be your, I guess you could say, like your ultimate goal. The only goal for you to get funded is so then you can go and fund your own personal account, right? Just like for the example of Claudio, I don't know if he's in here right now. He made like 50K on his funded account. He can reinvest all that money into his own personal account now. Now he has $50,000 in what, you know, after the profit split. Now he has a $50,000 personal trading account where he keeps all the profit. You know, you make 10% a month, he's making $5 grand a month. You know, you want to use all the money that you make from a prop firm to fund into your own account.
Okay.
That's the goal.
And that's exactly what I'm doing. Thanks to you, bro.
Yeah, there you go. That was good.
Oh, look at Claudio here.
Yeah, he's a little silent.
Yeah, it's
Oh,
kind of
yeah.
quiet, huh? Okay.
Listening, bro. Just listening.
Yeah, bro. That's ultimately that's the goal.
So you look like you have big hangover.
I do.
Oh,
Crazy hangover, man. That detail. When I saw you guys put that on the Discord, I was already like on my 7th cup of whiskey.
Oh my god.
nah, yesterday I just it was chilling for me, but Friday night
I was like, man, you guys are a little late.
It's funny.
Question.
But yeah, so I'm gonna end the webinar there. I'm gonna stop